You're listening to Money Never Sleeps Radio. In your face.
What we got here is a failure to communicate.
Oh, have I got your attention now?
Greed, for lack of a better word, is good.
You know what I mean?
Money to be made in a place like this.
Money never sleeps, pal.
You're crazy. Don't run when you lose. Don't whine when it hurts.
You know what it takes to sell real estate?
It takes brass.
I've fallen, and I can't get up.
All right, welcome to Money Never Sleeps. This is a show where we talk about anything and everything that impacts the flow of money from around the corner to around the world. And I want to thank you for joining us. Topic for today is going to be tokenization. Very interesting things transpired, but before I get into that, I do want to touch on the oil situation and what's going on with Iran and basically the potential impact that this is going to continue to have until everything's resolved. Listen, the United States, big producer of oil. The thing about it is that when you have speculators out there that are betting on what's going to wind up happening, because that's what's happening with the price of oil. It's not really a supply and demand issue right now. When you see your gas prices going up and things like that transpiring, it's so much the speculators getting involved. Same way when you get a lot of hype within a stock and it runs it up or it runs it down. It all depends on what's transpiring, so that's why the derivatives market is anywhere from $600 trillion to $1 quadrillion, so you have people betting on this. But the reality is that there was a situation that happened, I believe, somewhere in Texas. A oil refinery caught fire, so that may be impactful here in the United States. But what's going on in Iran and the deployment of troops, which I'm really not on board with, but it is what it is. Just hopefully, these soldiers that are going out, the Marines that are going out, the airmen that are going out, they all come back home safely. But with what's going on there, they're starting to let oil come through. The tankers come through, some of them, not all of them. I think that's going to give relief for India and Asia and that part of the world. I do think that the speculation is going to die down. We see that a little bit, but the volatility is ridiculous, and that's where traders make their money. With the volatility, they get the spread up, down, sideways, whatever the case may be. As long as it's not flat, they're is news driven, event driven, and you have the speculators there. Just like as I said, they're gambling on what's going to happen. And if you get enough players going in there, thinking that something's going to go a certain way, you're going to have something that's reactive. That really has nothing to do with the supply issue, because right now there really is no supply issue at the moment. Now, could that change in the future? Sure, anything can change, but we're going to see how things roll forward. Same thing when you're looking at the gold and silver markets. I made mention of this a few times. You have the chip manufacturing that is starting to get bigger and bigger. And they utilize silver. They utilize certain precious metals. So I think that you're going to have a steady pricing mechanism there with them at some point. But you're still going to have the volatility, and that's the thing. People looking for the safe haven. But is it really gold all the time? Is it silver? Is it platinum? Or is it Bitcoin or other crypto assets? You pick your poison. It's all relative. It all depends on what someone has comfort in and they believe in, that is a safe haven in volatile times. But even in those times, those safe assets become volatile themselves. And we see it constantly. So just be vigilant. Don't try to be a little proactive and not reactive with what you're doing. Now I want to go into tokenization. Nasdaq maybe about a week or so ago, they made an announcement that they're looking to, and they've been saying this for a long time, but they just got the nod on it from the SEC to go and tokenize securities. And that's a big thing. And the reason why I'm saying that thing is a big thing is because that touches other markets. Nasdaq is huge, okay? And with what they're doing there, it's going to have a trickle effect across all the service companies that deal with them. Okay, you have transfer agents, you have other groups that are in there that provide services to what's happening on the Nasdaq, and that's going to be impacted. They're going to have to conform to the new format, because it's not a matter of saying, okay, we're bringing in blockchain, getting rid of everything. That's not the case. I've always said it, and I will say this until the end of time. It's not DeFi versus, CeFi. It's you're talking about a convergence of traditional finance, or CeFi and TradFi. It's a convergence of traditional finance and decentralized finance coming together, finding that synergy, and it's happening. So we see it with the Nasdaq. They're rolling forward, and they're moving even faster, because I believe that they are making a deal with Kraken or something for them to go and roll things out. Now, the interesting part is the New York Stock Exchange. Well, they just announced the same thing. Okay, and this was just, I believe today or yesterday, they announced the same thing. And what that means is that they're looking at 24/7, and they've been speaking about this as well for several months, and even longer than that. And basically what you're looking at is, when they accomplish this, they made a deal with Securitize. Now, what Securitize is, they are, let's say they are a transfer agent on steroids. Okay, they are really something else. They're doing a lot of great things in the DeFi space, and they're basically allowing an exchange to actually go and go blockchain, and that's going to be one of the pivotal points, because the Nasdaq, when they do this, you have these transfer agents. They're going to have to conform to this stuff, and I believe that they're not going to have any choice, right? Because the same transfer agents that deal, and I'm not just talking about DTC, I'm talking about smaller transfer agents that are dealing with stuff, because they do deal with things. Okay, DTC, they're going to have to conform, and they're starting to. They already made an announcement that they're looking to go have blockchain infrastructure, but within their infrastructure. Okay, now, does that mean that everything disappears in a heartbeat? No, they're still going to have legacy systems, and they'll basically, vanquish them out of existence. And it's going to take time to do, but it'll happen at some point. But they'll still have those legacy systems somewhere, just in case. Okay, and I think that with the New York Stock Exchange doing what they're doing, it's going to open up a lot of doors. It's going to open up a lot of opportunity. And remember, the New York Stock Exchange is owned by ICE, the Intercontinental Exchange. The Intercontinental Exchange, if you recall, they made a $1 billion investment into Polymarket. Okay, you see how all this is coming around? They're looking to have all these products, these blockchain integrated products that fit regulatory frameworks, for them to actually utilize the power of blockchain for custody, for transparency, for everything. Okay, and just imagine, you're able to go, as a company, you're able to go utilize blockchain to go submit your stuff to, whether it be the SEC or whatever the case may be, or if you're doing stuff at the exchange, or even as a shareholder. Bear in mind that just because a security is tokenized doesn't mean it's a replica of the stock. Okay, it's representing the stock, but the stock is locked, and basically that token becomes the stock. So don't get it wrong that you think that it's a replica or a duplicate of it, and basically it holds no value. No, it's the same. It's like holding a stock certificate. It's just typically when you buy stock at a brokerage firm, you see it in your account that you own it, but on the records you really don't own it. You own it, but DTC holds it, and the brokerage firm, their name comes up as holding it. Okay, and on your behalf, they are your custodian. But tokenization comes into play. Guess what? You can take those tokens, you can have self-custody, or you can move things around easily without having to tat it over from one firm to another. You can just take your tokens and do it yourself. It eliminates the whole process of things. Okay, and it makes everything more efficient, cheaper, and everything for the brokerage firms, for the whoever the clearing houses are, for DTC, for the transfer agents. It makes it easier for the shareholders. It makes it easier for everything. Okay, and again, this is where things get very interesting. All right, what I want to do, I want to share some input from John Henrik. He is the lead on all the technology for the New York Stock Exchange. So I want to get to him so that we can get some context as to what's going on. But it's always good to make reference to I believe the comments that are made in the industry, in the financial industry, but also the blockchain industry, so that as investors out there, you get a better whole or better idea of what is about to come. So hang tight. Let's play that audio.
It really signifies a key pivot point in the modernization of our modern market infrastructure. And I think if you look back and how things have operated, and sort of the fixed trading hours, fixed settlement cycles, funding cycles, this really signifies a key pivot point for really us to bring in a number of market participants who want to innovate using some of these newer digital technologies in a way that preserves regulation and upholds issuer and investor protections. When you look at what we're building with this platform, it's really the first steps in overhauling the plumbing of the market. And when we look at our broader strategy across ICE, right, there's a lot that we're doing with our digital strategy to take these new, more modern on-chain technologies and help bring them to our clearinghouses, for example, to help make collateral more mobile and free up some of the capital that's in those clearinghouses. This venue is an extension of that. I think what we're doing by bringing trading and settlement into one single platform, one single venue, we're going to be able to offer to these regulated market participants a place to begin to develop native digital solutions for their customers in a way that doesn't require the erosion of any of the embedded protections that exist in our markets today.
All right, as you heard, New York Stock Exchange, they've been at it for a little bit, and they're looking to do more and more and more. And again, this is where it's going to get extremely interesting for the financial industry as a whole. And I do think that that we're going to see a lot of innovation in the space. When you're talking about tokenization, and you have JP Morgan, they have their Onyx system. You have HSBC, they have their system. They're trying to do this stuff. They're using stable coins and everything. So the securities part is different. But I don't know if they're going to do this. I would imagine maybe they will, because it makes it an easier situation. But if they adhere in some respect to ERC-20, those are Ethereum's protocols, if they have some sort of, they integrate that on a protocol level, which again, I don't know if they are, but if they do, the great thing about it, it gives them access to the ERC 1400 standard, okay, and that is for securitized tokens. token securities. So basically you can, you're adhering to something that is giving you a lot of basically controls of what happens. And in a regulated environment, there's a lot of transparency there. But, on the Pecu Novus blockchain, something bigger is happening there, because that is integrating ERC20, also going to be integrating ERC 1400 alongside the PMP16. Now, I know it sounds like letters and numbers, but what it means is that you're going to have transparency, high fidelity data transparency, and you're going to have high compliance together. Okay, and this is only happening on the Pecu Novus blockchain because when you're talking about 200-300 points of data that are transparent data that is out there for a token, and then all the different types of tokens that are there and the way that they're structured, because as far as the data is concerned, you also have some basically you have subsets of tokens which allows an issuer or an institution to actually go and issue a stable coin under that banner and basically have it for their ecosystem without having to create a brand new stable coin, and it avoids them having to even have their own blockchain. Okay, and I'll go into that on another episode to go a little more in depth. But since it's on my mind, let me just play this quick song that has to do with Pecu Novus itself. Hang on.
Out where the lines get drawn in sand, where banks don't reach and deals don't land, there's a signal rising, quiet but strong, a new kind of road where all belong. Yeah, the world's been waiting on a better way to move what's earned at the end of the day. Pecu Novus building rails that run.
All right, see, I wasn't kidding. It was a short song. Anyway, what I want to do, since we're on really going in deep with tokenization, Securitize is the leader in this space, and they have a lot of great things going on. Carlos Domingo, him and his team did some great things here, and they're continuing to do great things. They are pretty much the transfer agent for the New York Stock Exchange with this transition into blockchain. So it's going to bring a lot of interesting things to the table. But we have some audio from him, so you can enlighten our listeners a little bit with what Securitize does and what his view is of for the future of finance. So hang on, let's play that audio.
New technologies don't necessarily completely displace old technologies, right? Like, today everybody uses, cloud and PCs and more, phones, etc. But some banks still have the mainframes where they run their old systems, right? And they've never got rid of them. So I do believe that, the existing financial services industry as we know it, it will not be completely displaced, maybe over time, but a very, very, very long period of time. But a new market that is based on blockchain rails, that is more efficient, is faster, is cheaper, is easier to access, will emerge in parallel, and eventually, over time, will be migrated over there. Tokenization is simply that the token represents the ownership of the asset. So whether the asset changes or not in price, it will happen irrespective of whether you have a token or you have another mechanism, right? So, of course, today markets, they actually, have certain regulations around guaranteeing certain price for transactions and stuff like that. So when you create markets on chain, you need to figure out how that you're going to provide the same guarantees. But besides that, the token itself is not going to be disrupting anything as far as it continues trading according to existing regulations.
All right, and you heard it from Carlos Domingo himself, and what Securitize is doing. But yeah, so again, I want to take the show. I want to go over some of the things that have to do with tokenization, because you may not everyone is knowledgeable with blockchain. Some people don't even care, as long as it works for them. But I try to give this information because this is the future of finance. The more you know, the more you understand, the easier it is going to be for you. You know, everyone drives a car, but how many people can get in the engine and understand it? You don't need to understand how the engine works. You need to understand that you put gas in here and this is what it does. So this is what we're trying to do. But I give the context of how things work so that you get some better insight. All right, anyway, I want to thank everyone for tuning in. And look, we'll be back with you with the next episode of Money Never Sleeps. Until then, you guys have a fantastic trading day. And as I said, be proactive, don't be reactive, because being reactive, you can mount up the losses and it can hurt. All right, you guys be safe. Thank you.
Initiating shutdown sequence.
You're listening to UCW Radio in your face.
What is your major malfunction?
So let it be written. So let it be done.
Ladies and gentlemen, my mother thanks you, my father thanks you, my sister thanks you, and I thank you.
The views and opinions expressed on Money Never Sleeps Radio are for informational purposes only and should not be construed as financial advice. The host Louis Velazquez and guests of Money Never Sleeps Radio are not licensed financial advisors, and any investment decisions made based on information presented in this podcast are at the listener's own risk. Listeners are encouraged to consult with a qualified financial advisor or investment professional before making any investment decisions. The podcast hosts and guests do not endorse or recommend any specific investment strategies or products. All investments involve risk, and past performance is not indicative of future results.